Morning, Steve here in Chicago with the morning grain comments. Prices are a little bit firmer overnight. The last 2 days we've really seen a sell-off in the grains because of, number one, the perception of some better weather across the Midwest. Number two, slow export activity out of the United States. And number three, the lack of any deal between U.S. and China trade. Yesterday we saw a steep sell-off when the President of the United States tweeted that he was going to put a 10% tariff on the remaining $300 billion of China imported goods. The Chinese were quickly to announce that they would probably do some kind of retaliation and would not stand for this blackmailing. So overnight, we actually saw the extended 2-week forecast drier for the Midwest, taking some of the rain out that we've been trading the last couple of days. That's helping prices. And also, we'll just kind of see if the market wants to kind of consolidate going into the USDA report Monday, August the 12th. We saw another private guesstimate out that the crop was going to be basically 14 billion bushels, average yield of 167.4, and the soybean crop 3.743 billion bushels, an average yield of 47.2. We did send out some guesses from two private groups about the size of the corn and soybean crop. We got a lot of emails back, especially east of the Mississippi, saying that those numbers are too high and that the yields just aren't there. Looks good from the road, but when you go inside, the yields aren't there. I doubt if the USDA will say much different than their July numbers on their August report. They still don't have a lot of data on complete acres in the prevent plant and what the farmers have planted, nor do they have a lot of data on potential yields because the crops are so late. It may not be until October until we get a good handle on the numbers. So the trade might be disappointed in the August 12th report, but it is interesting that one group that has been actively selling cash grain, 2019 crop, 2020 crop, and even the 2021 crop, suggested to farmers to come in and buy some October calls and sell some puts in the corn to protect about 35% of the sold inventory. They also suggested buying November calls and selling puts to protect about 35% of sold inventory. Some people think that we need a trade over 880 November beans, 414 December corn, and 490 September wheat to turn the charts positive. So we'll kind of look for those numbers. We did note that Brazilian corn exports hit a monthly high of 6.3 million tons in July, the highest on record since December of 2015. Their soybean exports, though, actually fell in July due to weaker demand from China. Their exports were down 23% at 7.8 million tons. We also note that from a export sales standpoint, as of July 25th, U.S. wheat sales are running 24% ahead of a year ago. USDA is talking about a 2% increase. Corn sales are running 16% behind. USDA is forecasting a 14% decline. And bean sales are running 16% behind. USDA is talking about a 20% decline. July U.S. soybean crush, soybean crush was only 158 million bushels versus 170 last year. So again, big sell-off yesterday, big increase in open interest. Could have been some end-user buying underneath the market. Could have been some managed fund selling in the market, and could have been some professional selling, also putting new positions on after the China trade war. So we'll see if the market can hold these price levels, especially if August weather is a little bit drier than normal. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.